Disclaimer: this video is for educational and informational purposes only and does not constitute financial advice. Always do your own research or consult a licensed financial professional before making investment decisions. When you start investing in ETFs, you'll quickly notice two names appearing everywhere: Vanguard and iShares. These are the two biggest ETF providers in the world, managing trillions of dollars and offering hundreds of funds that millions of people trust. But which one is better? Which brand should you choose for your long-term portfolio? And what are the real differences between them? Today, we break it all down: history, cost, performance, structure, strategy, and by the end, you'll know exactly which provider fits your investment style. Let's begin with the story behind each brand. Vanguard, founded by John Bogle in 1975, is famous for one thing: lowering costs for the everyday investor. Bogle believed that most people shouldn't try to beat the market. They should simply own the market at the lowest cost possible. This philosophy created the index fund revolution. And today, Vanguard remains laser-focused on simple, low-cost, long-term investing. iShares, on the other hand, started in 1996 and is managed by BlackRock, the largest asset manager in the world. While Vanguard focuses on simplicity, iShares focuses on variety. If there's an ETF category, sector, region, or strategy you can think of, iShares probably has a fund for it. From core index ETFs to thematic funds, ESG funds, bonds, emerging markets, and highly specific niches, iShares covers everything. Now let's talk about costs. One of the biggest reasons investors obsess over Vanguard. Vanguard is known for having some of the lowest expense ratios in the entire industry. For many popular index ETFs, Vanguard is often the cheapest or one of the cheapest options available. But here's where things get interesting. iShares has become extremely competitive in the last decade. In many markets, especially Europe, iShares sometimes even undercuts Vanguard on fees. So the idea that Vanguard is always cheaper is not always true anymore. Next is performance. Here's something most beginners don't realize. Performance is usually almost identical. Why? Because both brands often track the same index. If both Vanguard and iShares have an ETF following the S&P 500, they'll perform almost exactly the same, with only tiny differences due to fees, tracking error, or structure. There's no magic. Both simply follow the same market. So performance shouldn't be the main deciding factor. What about dividends? Again, the differences are usually small. Some Vanguard ETFs distribute dividends quarterly, while some iShares ETFs distribute semi-annually, and vice versa. Differences exist, but none of them significantly impact long-term returns. Now, let's talk about ETF structure, because this is where the two brands sometimes diverge. Vanguard is known for its unique mutual ownership structure, meaning the company is actually owned by its funds, and therefore indirectly owned by investors. This structure allows Vanguard to keep costs extremely low because it doesn't need to generate profits for external shareholders. BlackRock, which runs iShares, is a traditional for-profit company. It has shareholders to please, which creates a different set of incentives. But because BlackRock is enormous and highly efficient, they're able to keep ETF fees extremely low anyway. So, while the business structures differ, the investor experience is quite similar. Now, let's talk about what ordinary investors care about: variety and choice. And here, iShares has the clear advantage. iShares offers hundreds more ETFs than Vanguard. If you want a global ETF, both brands have one. But if you want a very specific thematic ETF like clean energy, robotics, cybersecurity, biotech, or lithium, chances are iShares has it and Vanguard does not. If you want bond ETFs, iShares offers one of the biggest bond ranges in the world. If you want emerging markets, iShares has more options and deeper exposure. Vanguard tends to focus on core, broad-based ETFs designed for long-term portfolios, S&P 500, total world, total bond market, and so on. Meanwhile, iShares offers the mainstream options plus the niche ones. Another key factor is liquidity and trading volume. iShares ETFs, especially in Europe and Asia, often have much higher trading volume than their Vanguard equivalents. That means tighter spreads and more efficient pricing, something traders and frequent investors might find important. Vanguard ETFs are usually extremely liquid in the US, but the story changes depending on the region. Now let's move to one more subtle but important point: reputation and trust. Vanguard is famous for being investor-friendly, low-cost, and ideal for long-term passive investing. Many people feel emotionally connected to Vanguard because of the philosophy behind the company. iShares, backed by BlackRock, is viewed as powerful, innovative, and global. It's seen as the professional option with the broadest tools for investors of all types. So with all these factors, which brand actually wins? Here's the truth: neither brand is objectively better than the other. Instead, each one wins in a different category. If you want the absolute simplest, cheapest, no-nonsense index investing strategy, Vanguard is usually the top choice. If you want the widest product range, the highest liquidity, more flexibility, and the ability to access niche ETF categories, iShares likely wins. In reality, many investors use both. You might choose a Vanguard ETF for long-term core investing and use iShares for additional exposure to bonds, emerging markets, or themes. There's no rule saying you must pick one brand forever. So the final verdict is this: Vanguard wins for simplicity and cost-focused investors. iShares wins for variety, flexibility, and global reach. And you win by choosing whichever ETF fits your personal strategy, not just the brand name on the label. If you enjoyed this breakdown, hit like, subscribe to Money Mindset, turn on notifications, and comment below. Do you prefer Vanguard or iShares, and why?